milestone for us, and we are really looking forward to talking with you more about the guidelines for the Multifamily Housing Program, Infill Infrastructure Grant Program, Serna Farmworker Grant Program, and the Veteran Housing and Homelessness Program. Thank you so much for joining us. Today, I'm going to kick us off by giving just a very high-level overview of what AB 434 is, and then I'm going to pass the mic to my capable colleagues to go into greater detail about what the guideline changes that we have accomplished entail and that we are putting out for public comment. So, wanted to also take a brief moment to introduce Ruth. She is our new branch chief over AB 434 implementation. Huge welcome to Ruth. She's just about a month in now at DSFA and is already contributing a ton to this. Gina Ferguson, of course, has been at the helm of AB 434 implementation, including drafting the guidelines, working on the consolidated application, and more. And you'll hear from our subject matter experts and program leaders today, including Hector Leyva, the section chief over MHP, Alexandra, and I'm so sorry I didn't practice your last name, so now I'm just going to go with everybody's first name. Our HCD specialist and expert on IIG, Gabriela, also HCD specialist and our expert on Serna today, and Becky, our manager over VIP, who will be presenting on VIP today. Next slide, please. So for those who are newer to the conversation, AB 434 required HCD to align our programs for all of our multifamily funding programs for affordable housing development and for a couple of programs that fund single-family affordable housing development. Today, we are focusing on the multifamily programs. They are MHP, VIP, Serna, TOD, IIG, and HHC. And although all of those are named in statute and may all have funding in the future, for the first Super NOFA round, TOD and HHC do not have funding. And so this set of guidelines only tackles those 4 programs that will have funding under our first Super NOFA early next year. AB 434 not only required that we line up the way that the program guidelines work and the way that the programs run, but also ensure that we have a single consolidated application process so that developers can come in for multiple programs simultaneously under a single application using a single uniform rating and ranking system. So that has been what we are working on at this point in the process. We have already begun working on the one-stop shop application, which will be rolling out early next year, and we will be talking through both the major guideline revisions and our proposal for the single rating and ranking system. Next slide, please. So in addition to the sort of technical strategies for increasing alignment, AB 434 really at a higher level strives for both equity and efficiency. In terms of equity, we are building into our guidelines the current state policy priorities of deep affordability, really building housing where the need is the greatest and where supply is the shortest, ending homelessness at a state level, ensuring that our assets, our HCD projects, have diverse locations, including locations with access to opportunity like great schools and amenities and transit. And we're ensuring that historically excluded developers have a fair shot at funding through the Super NOFA. In terms of efficiency, we are trying to make sure that this process is transparent, that you know what's going on, that you have an opportunity to weigh in. And then once the NOFA is released and the application is released, we hope that it will be a fast process that is simpler than it may have been in the past to come in under multiple applications, and that we continue to line up the policies and the goals of our programs and continue to strive for cost containment as one element of industry efficiency. With that real high level introduction, I'm going to now pass the mic to Gina, who will go over the rest of our agenda. Thanks a lot.
Hi, good afternoon, everyone. It's great to be here and great to see you all in the participant chat. Just going to do a brief agenda overview, and then I will hand the presentation over to Hector. We are going to talk about the individual programs first and just do some high-level highlights of those programs. Then we will move into the universal scoring system, which is published on the HCD website as the scoring appendix, including the tiebreaker. And then after that is complete, we'll talk about the timeline of the NOFA and have a Q&A at the end. And so what we're asking is that the questions and answers be put into the chat. We will publish that, and what we'll do at the end of the presentation is take those questions in the order that they were received. If there are any that are more complicated than we want to go into during this session, we'll work with you to address those, and we want to be able to get you the best answer in the right amount of time. So with that, I will turn the presentation over to Hector. Thank you.
Thank you, Gina. Thank you, Sasha. Appreciate that introduction, as well as the opportunity to work with everybody on this endeavor that we've been on for the past year or so, and looking forward to this finally getting implemented and in reality starting this upcoming February. For those attending today, some of the information will look familiar. We hope you have and appreciate the work that has been completed, and more importantly, the changes that are proposed. As you have an understanding and are aware of the impact that the projects you propose are being completed with these draft guidelines that have been released. For those new to HCD stakeholder sessions, we look forward to hearing your feedback on the guidelines and ease of applying for the multiple sources of funding, as well as input or interpretation of anything we may have missed. The first item I'd like to present that has been updated is the look and formatting of all the affected programs. They've been updated to reflect and consistently viewed per se with the MHP program. So as you go through each set of draft guidelines for each of the affected programs, you're going to notice that whether they were before, they are now, they will look similar to what you're seeing on the screen ahead of you. Article 1, general purpose information. That identifies the sources of funding for those individual programs, as well as alters or amends or even replaces with the AB 434 statute. It makes that consistent across all programs. What it also does is provide definitions, and what we've encountered and realized, not only while completing and funding these programs separately, there's different terms and meanings that you come across as you submit an application to each program. What we've done is align those common definitions and place those in the MHP guidelines with the program-specific defined terms in each of those specific draft guidelines. Article number 2, that's your program requirements. That's what you're going to find that it's common for all these other programs to now align with MHP. This is where you're going to locate your eligible project, your eligible sponsor, and probably most importantly to all of you, your threshold requirements. Article 3 are the general program requirements and are inclusive of loan terms and amounts, your rent standards, and uses of income and operations. Article 4, that's your application process and procedures. This is what's going to constitute and define what a complete application is, as well as, I'm sure what a majority of you are here for, the scoring. All the programs do now align with scoring with MHP, as well as the individual program-specific scoring opportunities. You'll find the overall all program scoring located in this area. And then last, for those projects that do eventually get awarded, Article 5, that's the operations for post-award. This is where you're going to find reporting requirements with our asset management and compliance branch, as well as anything related to sales and disencumbrances, foreclosures, or even if you have to go to our CRP or transaction unit. So as you go through all the draft guidelines that have been posted, some of the common things you're going to notice. Common content found across all of them is going to be identified by red font. Anything unique to an individual program is going to be in black font. So for example, A, when it describes what an eligible project type, one of the subsections in that area, everything's listed in red except for transitional housing, which would be specific to that specific program that the draft guideline references. So as you go through, you're going to see commonalities that have been streamlined to be more efficient in our review process, as well as assist you in submitting these applications to us. Now, let's go ahead and go into the first program that's affected, and that's the Multifamily Housing Program, commonly known as MHP. So the objective, obviously, as Sasha stated earlier, but to add to that a little bit, it designated all the program funds must be available at the same time as MHP. Gone are the days of having multiple applications at different times throughout the year, competing for different sources of funds, but for the same project. AB 434 has aligned all these programs as a requirement, and now we have the MHP, VHIP, IIG, and Serna programs all being released simultaneously in one NOFA and being submitted as one application. Threshold and scoring requirements are also now updated for all those impacted programs to align with MHP. So the threshold requirements that you are familiar with in MHP now are subject to those other programs. Additional scoring requirements and threshold requirements might be in effect if it's specific to that program. For example, IIG has transit requirements, or Serna has specific targeted population requirements. Each of those will be identified in the program-specific draft guidelines with the overall arching goal of everyone having to complete the MHP threshold and scoring requirements. You can go back one. Oh, no, this is correct. Lastly, to administer funds consistent with MHP, the goal for AB 434 was to ensure that once a project is awarded, it's awarded all the funds necessary to ensure the project can move to construction and ultimately completion and have tenants inhabiting it. Once this happens, the goal for the department is to have a standard agreement for all the programs at the same time for award and be subjected to or submitted to our loan closing partners and then eventually our asset management branch. Next slide. Thank you. So, as you heard me say earlier, a lot of the definitions across all the programs were slightly different and even potentially conflicting. One of the things we've done is align common terms across all the programs and listed those terms here in the MHP draft guidelines. For anything that is program specific, again, it's in those individual draft guidelines. Some of the examples I'd like to go over with you that are common across all programs and now fully defined and consistent are as shown on the screen. An affordable housing development. That's synonymous with a rental housing development. Agricultural workers, employment, and households are new terms that are defined for MHP and work synonymously and consistently with the Serna program, which targets these populations and project types. An applicant might be something that's defined in IIG, with a sponsor being defined in MHP and a developer being defined in another program. Those three have now all fully been defined in the MHP draft guidelines and are consistent across all programs. Commercial space has also been one of the areas that we have now defined. Commercial space is consistent amongst all programs and generally encompasses all commercial space that is available in a project that services the tenants of that project or potentially provides services to the area around that project. And last, one of the big defined terms that we were able to accomplish for this round was enforceable funding commitments. EFCs has been a source of contention because various programs define EFCs as different things. We have now accumulated and combined all of those various terms into one defined term here in MHP that all the programs are subject to. Now let's move on to eligible project. Many of you are aware of what the minimal and minimum conditions and subsections are for an eligible project in MHP. Some of the notable changes I want to reference, though. We no longer have a supportive housing project type. Chronically homeless is now absorbed into the special needs populations and is a targeted population as defined in our guidelines. In order to achieve the minimum requirements for a special needs project, 45% of the restricted units, so that could be by MHP or any of the other programs or even external sources that are targeting that specific population, as long as they are restricting to one of the populations that are defined in our guidelines, they would meet that. That 45% might seem like a large number, but that actually aligns with the TCAC minimum requirements. The number of units needed, that's also defined in our guidelines, and that has been now consistent with all the other programs, so there's no variation in the amount of units needed for a project. One of the biggest areas of confusion for a majority of the projects that have submitted to not only MHP but various programs is the variation in the special needs populations definition or targets. We've aligned those now to not only not overlap any longer, but to maintain consistency. And if applying for veterans homeless in VHIP, you can do the same thing for MHP. The last thing, for anybody that's doing a special needs project in MHP or any of the other programs, if it includes MHP funding, they would still be subject to those integration requirements. The other big notable change for eligible project in MHP, that's the Farmworker Housing Project. So we have removed farmworker housing as a special needs population and created its own project type. The purpose of that was to better align with the Serna program. We serve the same populations, restrict to those populations and potential AMIs, and most notably, this project type is not subject to integration requirements. So let's go ahead and get to one of the most confusing topics that we have, not only externally, but internally as well. For the MHP program, assisted versus restricted units. So a restricted unit as defined is restricted by any public agency, and HCD being a public agency is inclusive in this category, and they restrict to AMI and or occupancy restrictions. This can also include targeted populations. So if any public agency, including HCD, has a regulatory agreement that's restricting to any of those things, that's considered a restricted unit. Because HCD is a public agency, now we get into an assisted unit, and that's where this becomes program specific. So when you are applying to one of the programs that are impacted here with HCD, be it MHP, VHIP, or Serna, you will determine and identify in your unit mixes which units are being specific to those programs. AMIs for units also have now further been restricted to only include units that are 60% AMI and less. So anything above that percentage is not considered a restricted unit by the department. And this can include targeted populations. So why is this important? Well, MHP specifically is subject to UMR requirements. Next slide, please. MHP is specifically subject to UMR 8304C, and that requirement has now been included in the MHP draft guidelines under an eligible project. So what you're going to see is a potential adjustment to a unit mix as described below. So if your project comes in with Article 34 authority, meaning your project has been granted an allocation of units from that local jurisdiction, the number of assisted units by MHP will be increased for all the units that are 60% AMI and lower. Meaning, let's assume you have a 100 unit project and you come in saying you want 20% of the units assisted by MHP. But your local jurisdiction has given you an allocation for 100 of those units. We will assist and restrict 100% of those units, meaning 100 of those units. Projects without Article 34 authority. So you do not have an allocation of units from that local jurisdiction. Same example, you have a 100 unit project, you come in requesting 20 MHP units. We will assist the maximum number available by law, which is 49% of those units. So we will automatically increase your assisted units to 49. If there is a conflict where there's multiple programs being requested for funds, the most restrictive requirement in a program will prevail. And that's subject to not only this requirement, but any of the requirements in any of the draft guidelines. Now let's move on to eligible sponsor. And again, many of you are familiar with a majority of the requirements that an eligible sponsor has to be subject to. But some of the notable changes that we are making in the draft. It is the addition of tribal entities, an emerging developer, community-based developer, and new community-based developer. And as a result of those last 3 bullet points, experience requirements have also been slightly adjusted. A minimum of 4 affordable housing developments has to have been developed by the developer sponsor applicant. If you're not able to meet that, there are other opportunities to gain that experience, whether it's through the points or whether it's a joint venture agreement or partnership. There are different avenues to ensure the overall arching goal for the department is to expand the amount of developers that are eligible for funding, right? And the projects that are built. Lastly, the 3rd bullet point, culturally competent services can be utilized as an experience requirement, subject to additional requirements that you'll see once you read the actual draft in its entirety. So let's go into each one of those. Emerging developer. You would have had to have developed, owned, or operated at least 1 to 3 affordable housing developments equivalent to the proposed development project that's been submitted in size, scale, amenity, and potentially target population. A community-based developer must have 3 years of experience delivering culturally competent services. And this would be done in a community program to lower or low-income households. They should also be located in a low or moderate resource or high segregation and poverty area for the prior 24 months preceding the application due date. And last, new community-based developer. This is a sponsor that is not yet developed, owned, or operated an affordable housing development, but it has provided culturally competent services in that area and has teamed up potentially with a more experienced developer. Now, to further entice and incentivize these sponsors and giving them the ability to reduce projects, the developer fee has been increased for this type of project, as well as the loan amount has increased a $25,000 per unit increase if the sponsor type is one of the 3 shown above. Now, for a majority of you, again, the threshold requirements for MHP are pretty familiar and consistent. For those that have never applied or are brand new to potentially MHP or any of the other programs, eligible sponsor is the #1 threshold criteria. We have to make sure that the person applying is able to do the job. Next, we look at the project, and we want to make sure that the project meets one of the project criterias. We want to ensure that the use of funds for the project that's being proposed, and the use of funds meaning department funds, is an eligible source, and there are ineligible and eligible uses defined in each of the draft guidelines. In order to complete those 3 requirements and review those, we need to have a complete application. So that's where #4 bubble comes into play. Previously, for MHP, you had to have a minimum score of 90 in order to get in the door and have your application reviewed. That has now actually been increased to 110. There are additional scoring opportunities when utilizing other department funding sources in the Super NOFA. So if you go to VHIP, Serna, or IIG, you could potentially increase that minimum of 110 up to other amounts. Next, what we're looking for in threshold is that the funding gap that you're requesting, meaning the sources of money that you're requesting from the department, fill that final gap. The goal of the department is to ensure that once you've received department funds, you're ready to move forward with construction. There shouldn't be any, or there should be a minimal amount of time from the time you get awarded the Super NOFA money to the time construction starts. Next, we're looking for feasibility. We want to ensure that the project is going to be feasible and will not go in the red very quickly or shortly after being constructed. We want to ensure that the project will be feasible and there won't be a negative impact to any of the tenants involved. And last, we want to ensure that the proposed sponsors have site control over the project. If it's not in the name of the person that's applying or entity that's applying, and it's another unknown entity for us, the documentation submitted must show that the sponsor, either with the experience or that's applied, has control of that entity. So site control and or sponsor control. And with that, I will turn this over to my peer, Alex. Thank you.
Good afternoon, everyone. My name is Alexandra, and I'm a specialist with HCD focusing on climate programs. Today, I will go over the Infill Infrastructure Development Program in the context of AB 434 guidelines. First, I would like to provide a brief overview of the IIG program. The program's primary objective is to promote the infill housing development, and this objective is accomplished by providing financial assistance for capital improvement projects that are necessary for the development of qualifying infill projects. I would like to highlight these two key terms bolded on your screen for the program, capital improvement projects and the qualifying infill projects. Capital improvement project is the physical improvement of a capital asset that's necessary for the development of a qualifying infill project. Qualifying infill project, which we also refer to as a QIP, is a residential or a mixed-use residential development that's either located within a previously developed site or on a vacant site where at least 75% of the site is surrounded by urban uses, for example, commercial, industrial, transit, or a combination of these. As for the assistance type, under the IIG program, grants are available as gap funding for infrastructure improvements. And as I said previously, these improvements have to be necessary for residential or mixed-use infill development projects. It's important to mention that these guidelines apply only to qualifying infill projects. Capital improvement projects associated with qualifying infill areas will be governed under a separate set of program guidelines and will be issued later. Regarding eligible costs and improvements under IIG program, eligible improvements include physical improvements of the parks, water, utility service improvements, streets, roads, sidewalks, structured parking, among other costs. Next slide, please. Changes to the threshold requirement section of the guidelines were made to align with AB 434 and MHP guidelines. So to be eligible for funding, the qualifying infill project application has to demonstrate all of the threshold requirements, most of which my colleague Hector already covered within the MHP threshold criteria. But just to highlight a few threshold items that are new to IIG guidelines, applications have to satisfy a minimum score of 110 points. Sites have to be free from adverse environmental conditions. QIP sites have to be accessible to public transportation and amenities. QIPs have to be physically capable of accommodating broadband service requirements. And QIPs have to comply with the UMR-based restrictions on demolition and site control requirements. Next slide, please. Next, I will go over the latest policy and guideline-related changes, and I will especially focus on the first three items because later sections 300, 301, 400, 401, and 403 were for the most part adjusted to MHP guidelines. First item is definitions, and as my colleague already mentioned, a line of definitions was adjusted to MHP guidelines, and this includes definitions such as fair housing, enforceable funding commitments, tribally designated housing entities, among others. The definitions that pertain to IIG only were kept in the IIG guidelines, and this includes IIG-specific concepts such as capital improvement projects, major transit stops, qualifying infill projects, and many others. Second item I would like to highlight is eligible capital improvement projects and qualifying infill projects. And here regarding eligibility to be considered for funding, The CIPs and QIPs have to demonstrate a line of requirements, and these requirements are to a large part same as the requirements set in previous rounds of IIG guidelines. And some of these include that a QIP has to include at least 15% of affordable units. QIPs have to meet the net density requirements, have to be located in an area designated for mixed use or residential development. The main changes, however, refer to the newly added requirements for tribal projects, multiple department funding sources, and sponsor commitments. And all of these new rules were adjusted to MHP guidelines. Next items is eligible applicants, and this is a newly introduced section. Just like in the past version of IIG guidelines, to apply for a QIP, an applicant has to be either a nonprofit or for-profit developer, or a tribally designated housing entity that's the sponsor of a qualifying info project. This portion used to be in the definitions section of IIG. Now that we have a new section dedicated to eligible applicants, what's new is that this section sets new experience and capacity requirements for a sponsor. So here, the sponsor has to demonstrate that it has successfully operated at least 4 similar affordable rental housing developments. And sponsors should also demonstrate capacity to operate affordable rental housing. As I said, the remaining guidelines sections listed on your screen were adjusted to MHP guidelines, and I'm not going to go over them individually. Next slide, please. The last item I'm going to talk about is in the context of IIG is scoring. Just a reminder, once the applications fulfill threshold criteria, they will be rated with respect to the universal scoring criteria and IIG specific criteria. However, a project will not receive any points in the IIG scoring section unless the department verifies eligibility of at least 110 universal points. Now, IIG specific scoring section contains 3 additional scoring categories, additional in relation to universal points, that add up to 40 points in total. So here we have net density, proximity to transit, and pro-housing, and I'll say a couple of words about each. Net density carries a maximum of 30 points. Just like in the previous set of IIG guidelines for IIG program applications, applications will be scored based on the extent to which the net density of the project exceeds the required density. Net density will be adjusted by unit size, and points will be awarded in accordance with the schedule provided in a scoring appendix. Second, for the proximity to transit scoring criterion, applicants will be awarded up to 8 points. Points will be awarded based on the walkable route between the rental housing development and a transit station or a major transit stop. Lastly, IIG applicants can also qualify for a maximum of 2 pro-housing points. Here we suggest awarding 2 points for pro-housing designation outright. In addition, the guidelines would separately also award 1 point for jurisdictions adopting 3 out of 16 pro-housing policies listed in the appendix. This completes my portion of the presentation. Thank you.
Thank you, Alex. My name's Gabriella, or Gabby Navarro, and I'm a HCD specialist in the Access to Opportunity programs, which Serna is housed under. And I will be going over a similar presentation that Alex just completed, but for the Serna program. So going into the Serna program overview, this is just a very high level slide of what Serna does. So Serna projects include new construction, rehabilitation, and conversion. The project must include assisted units by agricultural households. Serna funds can be used for construction period financing or post-construction financing. However, the funds are for permanent financing only. Now going into some Serna guideline highlights and updates. So starting off, I want to mention in the regulations, Serna had single family activity and rental housing development activity. The draft Serna guidelines that are published are going to just include activity for the rental housing development, We will be releasing draft guidelines for the single family at a later date. So I want to bring that to everyone's attention. You won't see the single family activity listed in these guidelines. So going into some quick highlights of the Serna guidelines. Section 103, the definitions. This is probably just repeat of what we have heard, but just to highlight it, the definitions will be specific to Serna. The larger list of definitions will be housed in the MHP guidelines. Serna specific definitions, you'll see things like agricultural employment and agricultural households. The second bullet point here, eligible sponsor. This has been updated as Hector spoke to earlier in the presentation on slide 17. Also, as mentioned by Alex, and I believe Hector as well, the sponsor experience has been increased to a minimum of the 4 rental housing developments, and this will now apply in Serna as well. Section 204, eligible use of funds. This is now a much more expanded list to align with MHP. Most of the uses are similar, but I think for me anyways, it's much clearer and easier list to read. Section 505, reporting requirements. So previously in the Serna regulations, it was just kind of a small piece on reporting requirements. So now it actually has its own section and the requirements are better explained and in more detail. Now going into Serna threshold requirements. So this first bubble here I want to highlight, it is specific to Serna. This isn't a requirement in the other programs. So a sponsor shall be an organized nonprofit. This has been a threshold item, but I just want to highlight here that this is specific to Serna and there will be no flexibility on this. So this is important for Serna. Just want to highlight this here. And if you need further clarification on this threshold item, I would really encourage you to read section 210 of the new Serna guidelines. And also for our tribal partners, organized nonprofits will include a tribally designated housing entity. As Alex mentioned before me in the IAG slides, also under Serna, broadband service is now a threshold item. And the speeds are listed in the guidelines. So just a quick highlight, it's a speed of 25 megabits per second for downloading and 3 megabits per second for uploading. But you can go to Serna section 203J and there's more detail for the broadband service requirement. And then this is just a repeat again that the sponsor experience has been increased, but there are options for if you do have less experience that Hector went over earlier in the presentation, such as emerging developer or community-based developer. Also highlighted here, funding is prohibited for use in housing H2A workers. This has been listed previously within our Serna NOFAs, but now it is in guidelines as a threshold item. So I wanted to highlight that here for you today. Now the last slide here for Serna, looking at the Serna scoring. So Serna program specific scoring has a maximum of 40 points. The scoring is divided into 2 categories. The first category, where you can earn the maximum of 30 points, is based on the percentage of Serna assisted units in your project. You must have a minimum of 25% Serna assisted units to receive any points. The second category of scoring is based on the county of which your project is located, and that's for a maximum of 10 points. Each county has points designated. The points are designated by agricultural worker need, and they're based on the most recent data from the U.S. Census of Agricultural. If you want to get into specifics, there is a scoring appendix that will be discussed later on in this presentation, but that's where all of the scoring will be held. Next, I will be turning it over to Becky, who's going to do a similar presentation, but for VHIP. Thank you.
Thank you, Gabby. So as Gabby mentioned, my presentation will be similar because many of the items that has been added to Serna, IIG, and MHP has been added to VIP. So bear with me. Next slide, please. So with the approval of Proposition 41, HCD, in collaboration with CalVet, designed, developed, and administered the Veteran Housing and Homelessness Prevention Program. In short, we call it VIP program. Collectively, our goal is to build affordable multifamily housing for veterans and their families to allow veterans to access and maintain housing stability. So in order to apply for VIP funds, the project needs to be a new construction or rehabilitation of a rental housing development or a transitional housing. It can also be a conversion of a non-residential structure to a rental housing development. Next slide, please. So as mentioned earlier, the VIP program guideline has been restructured, and in the definition area, you will only see the VIP specific definition. All the other capitalized terms are defined in the MHP guideline. And speaking of the guideline, there are also two major updates in the VIP guideline. So the first one is the inclusion of the tribal entity, emerging developer, and new community-based developer as eligible sponsor type. That was previously discussed by Hector. And the other update is the limit on developer fee. So the developer fee will be determined by the number of restricted units the project proposed. The details are in section 205, and this is not a new, is not a change only applied to VIP, that applies to all the full programs. And on top of the updates, I would also encourage everyone who is interested in applying for VIP funds to pay special attention to section 201 to 203 and section 210 to section 215 in the VIP guideline, because these sections are VIP specific, and also it helps you to meet the program threshold. And from section 210 to 15, these are the requirements for the awarded project to comply to for 55 years. So you want to be aware of that. Next slide, please. So most VIP threshold items remains the same. There are 4 additions in the draft guideline. The first one is projects seeking for VIP funds need to restrict occupancy for at least 50% of assisted units to extremely low-income veterans. And the next one is the project qualifying as supportive housing. For this type of project, certain percentage of assisted units needs to be restricted to veterans experiencing chronic homelessness, homelessness with a disability, and other type of homelessness. And so the third update is the VIP program will request the sponsor to demonstrate the confirmation of local need for the project by including a letter from the local Veterans Affairs Office and a letter from the local continuum of care. And the last but not the least is the project needs to be capable of accommodating broadband services with at least a speed of 25 megabits. Next slide, please. So in this slide, I'd like to discuss about the scoring system for the VIP program. So we utilize the universal scoring criteria, which has a full point of 115 points. And there are also 2 other scoring sections for VIP and that is VIP specific. They are the lead service provider experience and supportive services plan, these two sections. So for the maximum score is the lead, is 18 points for the lead service provider experience. But it only applies to project with supportive housing or transitional housing. So if you have other type of housing, this scoring criteria doesn't apply to you. And so for the supportive services plan, it is 22 points for project qualifying as supportive housing or transitional housing. And if your project is not one of the tab, the maximum score is only 10 points. So let's say that if your project is not qualifying as supportive housing or transitional housing, so the entire VIP specific scoring criteria is only, the maximum score is only 10 points. So with that, let's turn our time to the universal scoring criteria, which will be presented by Gina.
Thank you very much. Thanks for all that great introduction with all the programs. Now we're going to go into the scoring criteria. What I'll be doing is covering each scoring criteria category briefly. Just note it's not a substitution for reading the guidelines. I'm just hitting the highlights and also focusing on some of the changes that we're introducing in the proposed guidelines. So with that, I wanted to say that we are calling the MHP rating and ranking system the universal scoring criteria and we have, as we mentioned before, separated it as in our proposed documents that are available on our website as the scoring appendix. So if you're interested in reading and getting familiar with it, we have a separate document for that, but it is applicable to all the programs. As we've gone over already, there are unique scoring categories for IIG, Serna, and VHIP. And what I'll be covering now are the scoring criteria, and then following that, we'll talk about the tiebreaker and then the bonus points that we're utilizing in terms of fund allocation. So one more note, there are a few slides in here that are detailed, such as this one, and I'll go through some of those detailed slides rather quickly, and they're really here for reference purposes. We will be publishing this webinar on our website and the slides, so some of those detailed examples are really for your resource when you review the guidelines, if you want a visual example of what you're reading in the guidelines. And one more thing I wanted to say too is that we've used a lot of acronyms. I think we've gotten familiar with the 3 or 4 program acronyms. I will also be using acronyms such as AMI, Area Median Income, and then 2 other state programs that we have alignment elements of in these scoring criteria are Tax Credit Allocation Committee, TCAC, or California Debt Limit Allocation Committee, CIDLAC. So those are 2 other state housing funding programs that I'll be referencing with acronyms, and I just wanted to mention that before I get started. Okay, so we have 6 scoring categories. Serving lowest income levels, this has a 30-point maximum. This is available for restricting units to tenants with rents that are between 20 and 50% of the area median income. To qualify and receive points in this category, at least 20% of these units must be restricted at 30% AMI or below, and those units must be spread across all bedroom sizes. For example, in a family project, we don't want all the 30% AMI units concentrated in some of the 1-bedroom units, or for a senior project that may have a mix of studio 1 and 2-bedroom units, we don't want all the 30% AMI units concentrated in the studio units. We want all the broad range of populations that are existing and living in these projects and developments to have access to those AMI levels. Next, state policy priorities. In the MHP program currently, this category is labeled extent to which the project addresses the most serious local housing needs. But with the added focus in this category to state opportunity mapping areas, we've renamed the category to better align with the scoring criteria that exist within it. So this category provides 15 points for projects located in high or highest resource areas, and 10 points for projects committing to one of 3 other options if those projects are not located in high or highest resource areas. The first 2 are 15% of the HCD restricted units must be occupied by homeless households, or 30% of the HCD restricted units are regulated at 30% ARMI below. That's one of the 10. That's a 10-point option. And then for rehabilitation projects that may not be able to meet these occupancy restrictions because the project is fully occupied by tenants currently, there are options to obtain points based on current MHP scoring, which is that an acquisition rehab project not be currently subject to income and rent restrictions, or is a high-risk project type. That's one of HCD's or MHP's project types. There's an additional requirement that the rehabilitation work must be at least $40,000 per unit. I want to talk just a little bit more about the resource area points, and I know many of you are very familiar with the opportunity maps and the resource areas, but for those that may not be, I wanted to provide a little bit of background. The opportunity area maps were developed a few years ago and were published in 2018 to identify locations that have higher quality economic, health, and educational opportunities. There's a methodology with the criteria. If you're interested in digging into that, on the HCD website and also on the TCAC website, there's information about this methodology, and feel free to follow up with me if you want links to that. So there's a methodology with the criteria, and locations are identified with designations of high, highest, moderate, and low, and they are mapped so that you can visually see color-coded what these areas are. So this particular point category provides 15 points for sites located in high and highest resource areas, but with a soft cap similar to what has been proposed for the CIDLAC scoring system in 2022. This means that high and highest resource area sites will have a 5-point advantage until 50% of HCD's NOFA funds have been, or of AB 434's NOFA funds have been assigned to projects located in high and highest resource areas. Next, the next scoring category, sponsor and property management experience, provides points for development, ownership, and management experience. Currently, MHP has a sponsor experience. What we've done is given 15 points for development and ownership experience and 5 points for property management. In response to numerous public comments that we've received, we're proposing to replace a point per project score with a minimum threshold of experience, which is very similar to the criteria used in the CIDLAC and TCAC programs. To receive maximum points, you need to have developed and owned 5 projects. There are additional criteria, so please do refer to the guidelines for the additional details for those projects that qualify. If an applicant includes a partnership that involves 2 general partners, only one of the partners need provide documentation of meeting the experience points. For example, a joint venture or partnership between an experienced and inexperienced sponsor does qualify for maximum experience points, as long as the experienced developer does. And just to highlight the property management, 5 points can be obtained for having managed 11 or more projects. And again, look to the guidelines for the details about that. One modification that I did want to highlight is that which is different from the TCAC and CIDLAC scoring criteria, the financial certification for the development and ownership points. The TCAC and CIDLAC system requires an accountant to prepare this. And what we're proposing, this is a self-certification through our program. So not requiring a financial accountant or tax preparer to sign off on that certification, but having an owner provide that information directly. Readiness, I wanted to highlight some changes and just the category generally. It's a 20-point category with 5 components. 2 are related to financing commitments, 2 are related to land entitlements and environmental clearance, and one related to the ultimate borrower entity. So as Hector stated, we have defined enforceable financing commitment, and so 2 of these components require evidence of financing, both construction and permanent, that meets the enforceable financing commitment definition. I wanted to highlight for the land use approvals, this is built upon the existing MHP scoring category. We have clarified that streamlined ministerial approval does meet the readiness requirement for land use entitlements. The details are in the guidelines. And then we have added disaster area accommodations for projects located in areas where there has been a FEMA major disaster within the past 3 years. Those will be awarded if the applicant certifies that all necessary land use approvals and environmental clearances will be completed within 90 days of the award. So we're really trying to look at what disaster areas are dealing with in terms of redevelopment and reconstruction and provide some accommodation for that. And I know we're getting close to an hour, so I want to go through the next slides a little bit quickly. I'm going to go to the next slide, which is a big category, 20-point category with, doesn't have a nice neat name. It's got infill, amenities, broadband, and sustainable building. So there are 4 components, 5 points each. And I wanted to highlight that the infill development points are available for an infill site, a site with a minimum level of density, or new in these guidelines, a site that is an excess state or local surplus site. And again, for the excess state and local surplus site, we want a certain level of local or state certification, and those details are in the guidelines. For proximity to amenities, as with the existing MHP program, we are referring to the TCAC list of amenities and providing points for those. New in the scoring appendix, we've expanded that list a little. So in terms of your ability to meet that 5-point maximum, in addition to the TCAC list, we have added several point options, and these are taken from our existing VHHP and IIG scoring options. So this is a way that we have integrated the MHP and also the other program scoring options and put as many of them as possible into this universal scoring system. So we've added some IIG and VHIP options under the proximity to amenities. The calculation is a little unique in that if you go to the TCAC regulations, this is a 15-point category. However, for the universal scoring, it is a 5-point category. So there's a modification that you do where you take 15 points and they equate to 5 points. So as you're reading through those guidelines, if you have any questions about that, please do reach out to our staff and we can answer those questions. Broadband access, this is a broadband access that is a higher level than what the with the VHHP and Serna team proposed for their threshold requirements. Units built are capable of accommodating broadband service with at least a speed of 100 megabytes per second for downloading and 20 megabytes per second for uploading. We're not saying that you need to provide internet services, but we want the units to be built to be able to accommodate that level of speed. Sustainable building methods. We have taken elements of the IIG program and also the AHSC program to provide options for sustainable building. So these include sustainable community strategy, green building certification, and electrification without connections to natural gas. These are options that we're providing for sustainable building. And then lastly, the cost containment category. This is a 10-point category, and it uses the same calculation as the current SIDLAC cost containment, which is 1 point for each % that a project's eligible basis is less than the TCAC adjusted basis limit. And just as a reminder, or if you're wondering what eligible basis is equivalent to a project's depreciable cost. So the total development cost, take the depreciable costs that are within that, and that is your eligible basis. So it's basically project cost less land, any things like cash reserves, things like that. So it's the majority of the project cost, but there is a process for determining that. I think most folks are familiar with it, but if you have questions, we can direct you to those who can help. All right, I'm going on to the tiebreaker now. So the tiebreaker that we are proposing has 3 factors: average depth of affordability, local funds and land donations, and cost efficiency. So for the second 2 bullets, we're looking for the highest ratio, and for the first bullet, we're looking for the lowest ratio. So the way to normalize these is in the first bullet, average depth of affordability, once the ratio is determined, we will invert that so it becomes equivalent and can be added and averaged with the other 2. And then we have an added component that projects will compete with like projects in the tiebreaker. This means that applicants will be separated into 3 groups: applications that qualify as MHP special needs project type or homeless applying for VHHP funds, applications that qualify as a large family project type but have fewer than 30% units designated for homeless households, and all other applications, including those that are applying for Serna Farmworker funds. The idea is to level the competition by allowing for inherent differences in cost that are associated with these project types to be grouped together, such as costs for larger unit size or costs for supportive services. So we're looking to kind of separate those project types in more similar, and they can compete within their groups rather than having folks really trying to get the best tiebreaker and tweak their project in a way that's not consistent with the project type that they're constructing. So I have a tiebreaker example. This is one of the areas where I'm providing some visual aids that we don't need to go into extensively. I wanted to just highlight them. But as you read the guidelines and are reading through the tiebreaker, these are some visual aids that might help you understand an example of the way the tiebreaker works. For the average affordability, we have an adjusted unit factor, and what you see with those @ symbols, that is the adjusted unit factor. So the idea is that there's an advantage to or a recognition to projects that are providing larger bedroom sizes. And since it's inverted, the larger bedroom sizes actually have a less than 1 adjustment factor. But keep in mind, we're going to invert the percentage, and so this is actually an advantage to the 3 and 2 bedroom sizes in terms of those scoring factors. One thing that I wanted to highlight too is that there is a floor to the average affordability, in that special needs average affordability will be no less than 30% AMI, and then all other projects, the average affordability for purposes of the tiebreaker will be no less than 40% AMI. And this is to help stop folks from racing to the bottom to do the most minimum affordability in order to qualify. In order to have a very good tiebreaker, we're looking for a range of affordability. We don't want to push projects down to an affordability level that's not sustainable in the long term for operations. So I'm just going to skip the next slide. It's more detail about how the calculation is done for average affordability. And then this is an example of the 3 factors in the tiebreaker. You have average affordability, % of local funds, and % of cost containment. There are weighting factors on the local funds and cost containment. Cost containment has a factor that slightly increases the cost containment weighting, and then local funds slightly decrease. We're looking to ensure that projects are being as cost effective as possible, and really would like folks to focus on how that impacts your ability to compete not only in HCD programs, but in other programs that you may be looking for state funding, such as SIDLAC or TCAC. All right. Next, going to transition and talk about the NOFA fund allocation. So this next slide, I know it's hard to read and listen at the same time, so I'll hit some of the points here. Since the NOFA is comprised of multiple program funds, we need a strategy to provide a way to assess projects requesting various scenario types. We're looking to reduce fund stacking for cost efficiency and minimize partially funded projects and minimize oversubscription of MHP. But we do understand that folks are going to come in and request financing in a variety of scenarios. For example, MHP only, MHP and VHHP, Serna only, Serna and IIG, etc. That was the whole point of having the AB 434 and the Super NOFA, is to combine the ability to apply for these project program types at the same time. But we also recognize that there are challenges with the funding strategy, and we do want to minimize partially funded projects. So the scoring appendix does have 2 sections that provide detailed information about how this funding allocation strategy works. I encourage you to look at that if you haven't had a chance to already, especially section 1 and section 5. They really give some examples and talk generally about the fund allocation rather than just being specific guideline requirement language. We have included those sections to explain the funding strategy, so I encourage you to read it. I do have an example on the following slide, but before that I wanted to say that example uses some terms that you can see: normalized score and adjusted normalized score. Normalized score is the actual point total divided by the application's total possible points. So in the case of MHP only, you have 115 points possible. If your actual point score is 115, then you have 100% normalized score. The adjusted normalized score is the normalized score plus applicable percentage points, which are the bonus points that I referenced a little briefly earlier. So these bonus percentage points are available for VHHP and Serna, and they're to incentivize the use of these funds, which have specific population targeting and are included in the Super NOFA. All right, so in this example, sorry, I'm losing my voice a little bit. First, we'll determine, this example is a project that has both VHHP and MHP funds, requesting both of these funds. And what occurs is that if projects are requesting both VHHP and MHP, for purposes of ranking the project in the MHP competition, we're going to use the adjusted normalized score. But for purposes of ranking it in the VHHP competition, we're going to use a normalized score. And so what we'll do is look at projects that are requesting VHHP, and in that pot of money or bucket of program funds, you'll have a mix of projects requesting VHHP only, and likely projects that are requesting VHHP and MHP. So all of those projects will be ranked against each other using their normalized score. And you can see an example of that here. But for a project that is requesting VHHP and MHP, that project, when it's evaluated for the MHP funds, it will receive 2 bonus points to incentivize or to help with the issue of partially funded projects, and we would like to minimize partially funded projects. So we're providing some bonus points to allow that project that's requesting 2 funding sources to have some ranking advantage in the MHP competition. So for that, and then it's very similar for Serna, except for that program, it is 1 bonus point. If there's an example of a project requesting both VHHP and Serna and MHP, which I think is highly unlikely, that project would be limited to 2 additional percentage points. I know it's a lot to take it in a short period of time, but that's why we've got the visual aid to go along with the guidelines. So please take a moment to look at this when you have reviewed the guidelines. And again, we're here to answer questions as you look through the proposed language. To close out, I wanted to talk really briefly about the stacking a little bit more. Just speak to the highlights here, that we are proposing a $35 million maximum per project. We are proposing that single HCD, in that maximum offsite infrastructure grants and operating support is not included. So you can have a subsidy from an HCD program that will not count. An operating subsidy will not count against the 35 million. And we're also proposing a 70 million per sponsor funding limit, but that does not include joint ventures. So if you are a sponsor that has applications that you're bringing in on your own, but you're also joint venturing with a community-based developer or emerging developer, that second set of projects will not count against that $70 million cap. And with that, I will hand it over to Hector to talk about the timeline.
Thank you, Gina. And now for the proposed timeline. All right, the guidelines have been posted to the AB 434 website, which you can locate at the HCD webpage. Each individual program has also provided links to those updated guidelines. Webinars started today and go through mid next week. The public comment period has begun. There is a link on the AB 434 website that you can utilize to provide feedback, in addition to sending an email to the AB 434 email inbox. Public comment period does end on January 5th, 2022. January and February of next year, HCD will be reviewing public comments, finalizing all guidelines, with the goal of finalizing, publishing final guidelines by end of February 2022. The NOFA and application documentation. The NOFA will be released no later than February 28th, 2022, concurrent with all the final guidelines. The online portal and application release will be released to the public no later than 2 weeks after the NOFA. So by the second week of March, we should have our online portal and the one-stop application ready to go. The department also will be providing technical assistance to sponsors for projects that they intend on submitting, as well as conducting workshops starting in mid-March going through early April. Depending on COVID and what that entails 3 or 4 months from now, that could be our normal standard procedure of going to the markets around the state. If COVID restrictions are still in place, we would be doing that as a webinar similar to this today. The application deadline, that will be 90 days after the NOFA is released. So if it's released end of February, that means it will be due end of May. So end of May, early June will be the application due date. For those that are not familiar with the MHP and or other competitive programs here at the department, once an application is received, we go into a cone of silence. So that means there's no interaction between the department and applicants until we actually select the projects that are going to be receiving awards. So that's after the threshold review and the scoring portion. Feasibility is when we start the interaction. So there's no interaction related to working with projects or sponsors to get them across the finish line, similar to over-the-counter programs such as CalHome or PLHA. And then lastly, we anticipate awards being announced no later than October of 2022, 11 months from now. For contact information, we highly encourage you to send any questions, inquiries, comments that you don't want to submit through the online comment portal to Super NOFA at hcd.ca.gov. The mailbox is monitored by HCD staff, and currently we're averaging about a 7 business day turn time for responses to be made. We want to ensure we get you that right response and or refer you to the right location. Now that draft guidelines have been released, we anticipate those inquiries to increase with us. And with that, let's go ahead and jump to our facilitated question and answer session. So I think, Gina, you're going to be moderating that, or is that going to be all of us? Okay, perfect.
Yes, please do place your questions in the chat, and we are going to take chat questions in advance of any verbal questions. I think with the time that we have, we'll probably be looking at chat questions, but if is there time for verbal, we'll certainly get to those. First question is, will there be a due date, or will applications be accepted over the counter for a certain period? There will be a due date, and after that due date, for this NOFA, no applications will be accepted. So please be sure to get your applications in by the due date, and there will be more information forthcoming. The calendar isn't quite settled, but Hector just went over the dates, yes, the date spans of what those are. Is there a rule set aside? I'm going to look to my team, but yes, we have set asides will be outlined in the NOFA, but MHP program does require, I believe, a rural set aside and has traditionally had one. So yes, we are expecting to have a rural set aside. In addition to that, there will be geographic of, I'm used to the word apportionment, and I think it's distribution.
Targeting.
Do you want me to take that one? Can I add a little bit more onto that? Okay.
That would be great.
So there are definitely going to be set asides. Those will be not only identified in our draft guidelines that have been released, but more importantly in the NOFA once that's done. As far as the MHP program, we have specific geographic targets we have to meet. So that's 20% for rural. There's a geographic target for projects in the north and projects in the south. So statutorily, MHP has to meet those. And rural is one of those geographic requirements.
Thank you. As Hector said, the NOFA will have information about set-asides, and we are still working through the set-aside percentages, so we'll have more information on that in the coming months. The next question I won't be able to answer, and I'm going to ask any of my teammates if it can be answered. It looks as though AHSC projects hoping for IIG funds are at a disadvantage as they will not get the multiple HCD source points. Was this considered an issue? And that's being new to HCD and not familiar with all the programs. I defer to anyone who may be able to answer this question.
I can chime in here. I don't think that we were considering providing multiple HCD source points to all projects that have multiple HCD sources. We are only using those bonus points in order to incentivize use of VIP and Serna as programs that really have a specific target populations and could potentially go underutilized in a Super NOFA process like this. So essentially AHSC, IIG, MHP are all equally advantaged under the Super NOFA, whereas VIP and Serna have a slight boost under the Super NOFA funding strategy. Does that hopefully answers your question?
Thank you, Sasha. I was not interpreting the question correctly. Thank you. And we're just looking to see if there are any more questions. I'm looking in the chat. If I'm missing any questions, HCD folks, please let me know. While we're waiting to see if anyone else has any questions, I just want to highlight that we are going to have a session next week that is a question and answer focused session if you're able to attend. This session is really focused on giving you broad information about what's in the guidelines and across the different programs. But we are going to be available for have more time for questions and answers at another setting. As Hector mentioned, we have the Super NOFA mailbox. So as you read the guidelines, if you have questions, please do send us those questions through that mailbox. but we do have another session that's Q&A focused, kind of like an office hours. So if you are able to attend that, we would really like to interact with you there and listen to your questions. We know that it's been very recent since the guidelines were published, and not all folks may have had a chance to read through them as thoroughly as you'd like before you ask a question. So just want everyone to know we have additional opportunities for you to ask questions and for our staff to be available.
At this time, there's no new questions in there, Jean, so I don't know if we want to continue. Wait a few minutes.
Probably wait just one more minute, but it does look like folks are exiting. We really do appreciate the time that you spent with us today. We know everyone has busy schedules, and this is a good chunk of your day to spend with us. We hope our presentation's been helpful, and just as a reminder, there will be a recording on our website, so the information in the slides will be available to refer to over the period of our public comment period. And as in the chat is a reminder of what our mailbox is. And we really appreciate your time being here with us today, and hope our webinar has been informative.